The purpose of this video is to show two different ways that you can see the change in cash from one period to the next. So most of the time you would use a statement of cash flows to see this change in cash. However, the statement of cash flows can be very confusing and a lot of people don't really understand it. So what we usually do for our clients is we actually just give them a balance sheet that shows a column that has the change from one period to the next in all of the balance sheet items. So what do I really mean by that? Well, a lot of times you may have said it yourself. A business owner will look at their income statement and they'll say, well, it says that I made money, but it's not in my checking account. So where did the money go? Or they'll say, hey, I had a loss this period, but there's money in my checking account. How can that be? So there's often a disconnect between those two things. And the reason that there's a disconnect is because there are certain activities that happen within a business that actually don't land on the income statement, they land on the balance sheet. So when you look at a balance sheet, which I am showing over here on the right-hand side, you will see that I have a change column here, which is showing us that cash at the beginning of August or at the end of August, was 695,000, give or take. And at the end of September, which was the following period, it was 681,000. So that means that cash decreased $14,250. So one's automatic response, who doesn't understand all of this, would be, okay, so we must have lost money on our income statement. But if we actually look at the bottom of our balance sheet where it tells us what our net income is, it shows that we had a loss of $15,706. Okay, so in this case, it was a loss and cash decreased, but as you can see, these two numbers don't match. So what is the difference between the loss of $15,706 and our change in cash of $14,250? And that is the items that you would find on the statement of cash flows, or you can find them in this change column on the balance sheet. So let's see how those two things tie together. So if you look here, we show that the cash at the beginning of the period was $695, $627.24. They're pulling that from the balance sheet right here. And then they're telling us that the cash at the end of the period was $681, $377.06. They're pulling that from this column right here. And then they're telling us that the net cash increase or decrease for the period was negative, and you can barely see it there, $14,250.18, meaning cash decreased by that amount, and they're getting that from this column over here. You can already see how these two statements are tying together and basically getting the same information, but just in a different format. So, okay, well, what next? Well, if we scroll down this sheet here, we'll see that there was a change in accounts receivable. So at the end of August, we had 12,000 in receivables, but by the end of September, we had 12,500, which means there's $500 of the income that we collected, or the income that we made, that we haven't collected on yet, which means that we have to subtract that from our cash. So you'll see over here on the cash flow statement that it's a negative because it's taking $500 away from the cash because it hasn't hit your bank account yet. Then if we scroll down a little more, we see a lot of zeros in this column. So those things don't get reported because there was no change in those things. And that might be like your assets and things. If you didn't purchase any new computers or equipment or anything like that, there won't be any change. So that's not going to show up on the cash flow statement. The next number we have is accounts payable. And what this is saying is that we actually reserved $4,975 of our cash by having bills that we haven't paid to the vendors yet. So we've incurred the expense, but we haven't paid for it yet. So we've retained that cash. So they're adding that cash back in here on accounts payable. They're adding that back to the cash number. Then down here, it's saying that we had a balance on the credit card of $42.78, and then we reduced that balance down to $940. So we actually dispersed $3,300 of cash, reducing the cash on hand, which comes over here as a negative number. And then there's another credit card that we incurred $319 of charges on that we haven't paid yet. So we're going to add that back to our cash over here as a positive number. And there really wasn't any other change here. And then we get back to our net income number. So as you can see, all of the numbers that are in this change column tie to a number over here on the statement of cash flows. So it's giving us the same information, but just presented in a different way. Now, if you're needing to fill out any type of a grant application or any type of a report where they're asking you to give them the total cash provided by operating activities, or cash provided by financing activities, or cash provided by investing activities, you would need to actually use the statement of cash flows because the balance sheet doesn't actually break those out into those categories for you. So hopefully you found this video helpful. If you have any questions, please let us know. Thank you.